In this week's podcast, I will argue why I think American Airlines and Dollar General might be two stocks you would like to have in your portfolio for 2026. I will share my views for the year. You are listening to the StockInvest.us podcast, Trading Tips with Jim, as we head into week 4.
Tick-tock goes the market clock. Bulls run wild, bears don't talk. Up or down, it's a coin flip game. Buy low, sell high, don't lose your grip. Stay sharp, stay fast on this trading trip. It's Trading Tips with Jim. Win or learn, never gim. Stack your knowledge to the brim. Tune in now.
Hi and welcome back. It's been a long time since last. Actually, the longest break I had in this podcast series since I started 6 years ago. Before leaving you before Christmas, I gave you 4 stocks, which I thought could do good. I said one might be a Christmas rally, that was Beyond Meat. Back then it was 104, still 104, hasn't moved. It was up and down during the period, but didn't move at all. It was considered to be a possible risky trade. I also gave you 3 stocks. I said these stocks, they have given long-term buy signals, so it's for the longer term, but one or two of them might start early and give a good return. The results are in. I told you that Adobe, DoorDash and Aeva was 3 companies that gave major long buy signals. Adobe was around 350 when I said it, currently at 304, down 13%. DoorDash was at 226, currently at 210, down 7%. Only Aeva Technologies did really well, up 37.93%. Aeva went up from around $14, currently just under $20, signaling it will move. Come again, these stocks gave long-term buy signals, so it was not for the short term, but I said one of them may already start. These stocks still hold the long-term buy signals, while Aeva, of course, with almost 38% gain, has taken out some of the upside. In this week's podcast, I will give you a reasoning for 2026, how I see the year shape up, and I will give you a few specific stocks, which to me looks very, very interesting. But before doing that, we will do as we always do. We will look at the buy and the sell signals, because that tells us where market is. And if we look at the markets, during this week, all 3 major indexes, Nasdaq, Dow Jones and S&P 500, are down. Only by small numbers, S&P down by 0.32% so far. It is Friday, the market hasn't opened. This podcast is for next week. Market seems to open green, so most likely we will end around 0 for all the 3 major indexes, meaning they haven't moved much. And Nasdaq hasn't moved much since I left you. I think it was 2nd week of December last time I gave a podcast. Back then, buy signals and sell signals were still okay. What are they now? Right now, 42% of all the tickets that we analyze at StockInvest.us, and that is more than 70,000 tickers. 45 of them qualifies for the signal. 42% are giving buy signals. That is starting to become a little high. Nasdaq still at decent levels. Only 19% of the stocks at Nasdaq is giving buy signals. It's New York Stock Exchange pulling up with 45, London at 39, Oslo at 45, Frankfurt at 49. And if we go, for instance, to Asia, we see Tokyo at 53, National Stock Exchange at 11, and Shenzhen, China at 48. These numbers, 49, 45, 48, they mean the buy signals are getting way up there, and you can expect a slight correction. If we look at the chart of, for instance, Nasdaq, we can clearly see that Nasdaq is moving horizontally. It has resistance above, but it doesn't have to break much up before there is no resistance at all, and the Nasdaq index can rally on. At the same time, going from a very, very sophisticated upwards trend to horizontal trend means that there is uncertainty about the movement, and we have to see the year 2026 as it is. It was fabulous for the market. It's been a strong year. Anything we see now is natural. What it means in the big picture is that not everyone is sure that the revenue growth will continue among companies. We are in the midst of the quarter results for Q4 coming in. Banks are coming in. They are coming in hot, as they have been over the last few years, over the last few quarters, coming in hot. Expected to be. Then it will be more of the bigger companies, and we will get the incentive either to move further up or go down. Why is it like this? The stock market always anticipates the future. So the prices today is not the real value of the companies today. It's expected how it will be in the future. And if we think that it might not be as much upside in the companies because it was euphoric last year, we get natural sideways movements. Can Meta keep making as much money as they do? Can Google keep making as much money as they do? There is a delay in things. All the crazy inflation that we finally has left behind us, it comes to fruition. At some point you run out of money, and we see these consumers, they had to cut down. Especially we saw this in high-end products. Even consumer products was hurting. This means that most likely there is a higher chance that the market will have a slight correction up than down. We need something to trigger the markets to go up. While the buy and the sell signals, especially the buy signals, are very, very high. The relative strength index is low. These two things argue against each other, but if you look at the volume, we see that the volume is pretty high on a flat market. Again, all of these things to me says that I wouldn't bet on a rising market as market is, but with Nasdaq at 19% buy signals for sure shows there is room for several companies at Nasdaq to do good, but maybe not the bigger ones. And that brings me to the big arguments of the year. I know some of you listeners find this a little bit slow, the way trying to explain it, but if you understand the way I see markets, you will understand why I pick how I pick, and why I, in all fairness, been quite successful all these years in predicting how things would go. I believe the following scenarios will happen. Oil price has fallen hard. I think it will keep continuing falling. It was falling well below 60, then we had Venezuela, then we had Iran right now, both of them right now, pushing the oil price a little bit up, so currently sitting at 59, but it's way below what it was more than a year ago. These things takes time before it absorbs into the economy, but it means that anything using energy, oil related, is cheaper. And across US, people are noticing when filling their cars. Gasoline is way below 3, measured under 2 in some states, 2.30, 2.50 at other states. It's really starting to trickle down the economy, and this thing spurs economic growth. At the same time, we know that the consumer is stressed after the last 5 years. They are really stressed, and the mentality has changed. You save more, you are more careful. Chipotle, for instance, said that they expected 10% less people going to the restaurant over the year. They keep that still for 2026 because people cook more at home, and it's typical when your economy is strained. And even when your income starts to grow again, it takes time before you change habit. This means opportunity for us, and this is one of the opportunities that I will outlay further. I see oil prices being this low, slowly coming into the economy. Companies have to fight for the customers again. I think they will reduce their prices. I believe 2026 will be a year of deflation. It's the opposite of inflation. Prices actually might go below zero, currently sitting around 2.6 year over year. But readings, a lot of readings around 2.3. Everything points that prices, the inflation period, we are done with that. It is the remains from what we had 4 years prior, still in the economy, but I think there will be more and more visible the changes over the last year, the economic changes, policies changes. All of this will be more visible. I think we will see a fight for customers again. Buying power is going up. I think we will have deflation, meaning that by the end of the year, the actual prices will go down. But come again, remember the consumer will be a little defensive. I don't think there will be major conflicts. I think it will be a very peaceful year when we go to 2027 and we look back at 2026. We will realize that 2025 was a very peaceful year. Yes, it's in media, it's all sort of strange things posted in media, far from reality. The fact is that there was less wars in 2025. They were brought to peace, a lot of them. We sit with three things right now. We sit with Iran, we sit with Venezuela, and we sit with the Ukraine war. I think, I hope that the Ukraine war would end in 2026. In 2025, I am feeling pretty certain it will end this year. I think all the incentives is at place for it to end. US is doing something they did when they brought down the Soviet Union, lowered oil prices, lowered income. Russia for sure is feeling the pressure from low oil prices. It is an excellent weapon. On top of this, there are some positive signs in general. Europe struggling with the economy. They have to come up with something to get it back on track. All of these things tells me that there's a high chance that Ukraine finally will reach a peace deal. Venezuela, I think it will be a peaceful transfer. And finally, I think the people of Venezuela will get back to prosperity. Venezuela is super rich on natural resources. They just happen to select socialist. You get what you select. Now it's a fair chance that Venezuela will do like Argentina. They will get in to something that again will bring people out of poverty and bring back economy. For Venezuela, I see only upside. It might be some turmoil during the year, but I don't see it escalate into something heavy. The bigger thing is Iran, because now people are speaking up against Khomeini, and high chance that this will not escalate into civil war or US intervention. If it will be some intervention, I think it will be strategic strikes. We see how US took Maduro, for instance, in Venezuela. How they dealt with Iran the last time, the capacities that the US have and demonstrate, and it's very important for US to demonstrate that they actually have the power. When we understand Russia, when we understand China, when we understand geopolitics, if things are for Iran, I think we'll just see US doing very strategical thing in minimal scale. Powerful, deadly, but in minimal scale. I think it's a high chance finally also for the Iranian people to have their freedom back. From this perspective, I don't see the huge geopolitical issues. It's Europe, it is EU, they have to figure out a few things. Hopefully we will see, but they are far behind. Saying that, I wouldn't bet on markets like Norway. I wouldn't accept parts of shipping, of course, which I am in for dividend. If anything, I would maybe look at car producers like Volkswagen, Mercedes, some of the bigger companies in Germany that has been struggling due to energy, because I think energy again will flow back to Germany in cheaper fashion, and they had some policy changes, and I think that will open up for a rebound in some of the German stocks. Having this in mind, deflation, peaceful world, interest rates going down, I'm also pretty sure of one thing, that is dollar strengthening. Dollar weakened quite heavily from, I think it was around 184 against the euro, all the way up to 120. At 120 I said, I believe the USD will strengthen heavily, currently pushing to close to 115.80 as we speak. So it has actually strengthened quite much, 2.5%. And I think we will see by the end of this year. I cannot understand why the dollar wouldn't be close to 1-to-1 against euro. At least I put my bet. If we put all of this into a major basket and we see what are the most likely outcome if this is right, then I get to the conclusion consumer products is a place to be. Argue for this, take a company like Walmart, Dollar General for instance. They import a lot of goods, so if dollar gets strengthened, they will be able to buy more products for less cost or for the same cost. On top of this, we see all the signs that US economy is doing really well. Buying power is going up, inflation is going down, and then you have interest rates going down, meaning more buying power means that the internal domestic consumption in US is expected to go up. Anyone following the stockinvest.us newsletter saw, for instance, my post last week when I wrote the newsletter last week. I argued for a company like Starbucks, and so far been very correct about that. Before that, anyone following the podcast knows that I think it was November, I said Chipotle at the current prices is a bargain. It was $28, $29. I got it just above $29, currently trading above 40. Arguments was the same thing. These companies are undervalued in my opinion, with the highest upside and the lowest risk. If you look like a company like Walmart, they have been on a very nice up run. I think it will continue, but between the two companies, and that will be one of my tips for 2026, I think Dollar General has a very nice upside to the stock price. On top of this, they pay very, very good dividends. So consumer products, is it? I have argued for this a few times, like this is the place where I want to be. Now I started the podcast saying that the market is moving sideways with a higher chance that it will have a slow correction down than going up. We need something to fuel the push up. It can come a push up next week if some of the major earnings are better than expected. This can be the one thing pushing the market up. If we see traces that, for instance, Nvidia and Google can continue to do good, we can have the push that breaks the resistance and we are on upturn. I hold a chance that the beginning of this year might not be continuous upturn. That is my view for the first quarter, maybe even the first half year, that it will be a slow development. And if you look in the longer chart, it will looks like it's sideways, but it will move up and down, of course, during the period. But there is no reason to believe any huge falls. Has to be something external to cause like a major drop. If there will be a major drop, I will just buy as I always have. Given the outlook of the market, me personally, I am roughly around 70% invested into the stock market, and I will stay there. I will not invest more unless I have a good buying opportunity to do so. I will do some changes in my portfolio. Last year I went more into consumer products. I went more into dividend payers. This is the trend I think will continue during the year, but it's not a place where I will totally invest. If we get the markets down, I will increase my exposure. But come end of year, when we look 2026 overall, I believe markets will be way higher than they are now. I'm pretty sure unless something exceptional happens, Nasdaq will be way above 25,000. Actually, I think the next decade will be a very, very strong decade for the Western Hemisphere. Of course, Asia will grow as well, but especially for Western Hemisphere, there will come so much that new technology that we will see. And back to geopolitics to end that argument. I don't think it will be wars. I don't think it will be even trade wars as we saw last years. These are just reconfiguring of the trading balance. Very successful for US so far. I think the war that we will see in 2026, 2027, 2028 will be technology. It will be who will be able to push the best. The thing ahead of us is self-driving cars. It is robotics. Tesla is one of my favorites for this, but there are a lot of other companies. This is the huge growth space in the future. AI, I think AI have peaked out. We will see spin-offs from AI who uses the AI technology, but AI companies as such might shake the market. We will see how OpenAI, Anthropic, etc. will do. These are companies that may bring down some hammock in the markets if they are not able to continue the growth of the product, the quality of the products they have. They have been doubling the capacities every quarter. I'm not sure they will be continuing to do that. I think that we will see AI flat now. That doesn't mean that the AI hype is over. The stock price hype, yes, but AI will spur into all the technologies that we use in ways we hardly can imagine. Dollar General consumer products will benefit from strengthening dollar. It will benefit from increased domestic consumption. The buying power is slowly getting back. Has less downside. This is very important. If I'm correct that the market won't do much, even maybe go down first half of the year, I think a company like Dollar General might even go up during this period. Brings me to the next companies, and to no surprise, I will talk about American Airlines company. I said that already in the opening statement. All airlines company, United Airlines, Delta Airlines, American Airlines will all benefit greatly from the lowering of oil price. United Airlines, Delta Airlines has already done it very well. Stock prices have been rising quite good. Anyone that picked up to that idea, which I told you, 8-9 months ago, have benefited very well for it. But American Airline Group hasn't done as good. Currently trading around $15, been high at $25. I think there is a good upside into American Airline. Will benefit from a stronger dollar due to how they are organized. Oil prices, I think, will fall even more, stay low, fall more, and for sure stay low. Will benefit even more. Buying power is getting back. We will fly more. Businesses is getting back. Economy is getting back. I think American Airline Group will be a good place to be. Forgot to say Dollar General is trading around 151, was high at 250. Very good dividend player, paid around 3% plus last year. American Airline hasn't paid dividends since, I believe, 2020. I think 2026 may be the first year that we will start to see dividend coming back from AAL. The ticker is DG and AAL. I also, when I wrote this newsletter last week, I started the newsletter. I wrote a little lengthy newsletter to our subscribers, and 50,000 people read what I thought about Bitcoin. Bitcoin was then 90,000. I said I believe Bitcoin will do very good. I think it will go up. I think it's a good chance to buy Bitcoin. Bitcoin currently $96,000 in just less than a week. Was up at 97, and I think the upside of Bitcoin is very high. Reason for this, I think interest rates will go down. There is no need to there is no incentives to have money in the bank. Bonds will go a little down. You will have the push towards crypto. I think gold is in the upper end of things. I personally expect it to go down. still can easily push upwards. Have no idea, but I think the money will flow. I think people will think markets is a little, maybe the stock market is a little on the higher end, and as we can see, it's moving sideways, and start to think that crypto might be a place where they can get return of the money. And there is many arguments why bitcoins, for instance, will continue upwards, because it's less connected to the fiat money. So crypto, I'm bullish. I think 2026 will be a good year, especially for the big cryptos. Bringing me close to the end of the podcast, have to think, is there anything I've forgotten to mention? Except that the $1,000 challenge. Before getting there, I will just sum up what I said very quickly. I believe it will be a year of deflation. I think dollar will strengthen heavily. I think there will be less wars than ever. It will be a very quiet year, where the focus will be technology war, not physical war, but technology war. I think China will spit out amazing things. I think US companies will spit out amazing things. We will see a fight of being first, and this fight will benefit the human race until it doesn't, but that's another story. Also, we have a space race ongoing. That being said, it's kind of like a little hype thing now. They want to settle bases on the moon and do further travel. We know that SpaceX, for instance, and Musk, they have really gone far. It's also a place with a high potential upside in stock prices. So look for companies that is related to the space race, and you might see a good candidate for 2026. Consumer products will do good from these. I think Dollar General is one company absolutely worth to have. I personally believe that it's a good stock to have in your portfolio. I will put it into my portfolio with the dividend that comes along. I also think there is an upside in American Airline Group. During this year, I will give you much more stock tips. Every week I will tell you what I think. I will pick short-term picks. These are for the longer runs. This is how I see trends. And you should have a portfolio doesn't only consist of day trades or week trades, but also for the longer run. Always served me the very best, being somewhat right about the long-term trend, getting in and raking the awards, like I did when oil was super low last time, 4 or 5 years ago, and I said just buy, because here is the upside. Then I sold when oil got too high, bought gold the same way. For the last 2 minutes, the $1,000 challenge. I had NEO and still have NEO in the portfolio. NEO currently only 446. Was bought into the $1,000 challenge at $5.10. So we are in a loss of 9% on the NEO trade as we speak. I absolutely hoped that NEO would do something in the Christmas, but it didn't. Well, it was up above 540, 550, then fell back. But since this is a part of the challenge where I tell you everything before I actually do it, I decided just to keep it, meaning that the portfolio is sitting at $3,266.83. I cannot understand what is holding NEO back. Some argue it's the EV fight in China. It is the focus on fossil cars as is. It is the relation between US, China, Europe, China, for instance. Europe feel very threatened about Chinese EV. And of course, big companies like Volkswagen, Mercedes, and all of them fight against cheap Chinese cars. But NEO keep growing, delivering more and more cars, strengthening their bottom line. Still, stock price stay very low. The analysts, they have prices, fair price around 650 right now, given everything. Most of them think the stock price should be around 8. Remember, NEO was put into the market first time around 650 was the IPO price. Went all the way up to 65. I told everyone back then, sell, because now this is out of the world crazy. Then I started to buy NIO when it took a really huge falls, because I believe NIO is the... If you don't know NIO is the one company that actually switches battery compared to other companies. They have this switching technology where they switch batteries. They have had very good gross profit margin. Then it came under attack by BYD in China, that was selling cars with losses to take market shares, bringing, I think it was around 15% gross profit margin, bringing it down to 7 to 8 to 9, somewhere around there. And this is what the investors don't like. So there will be a lot of focus on Q4 results for NIO and of course Q1. I will sit in NIO at least for this week more, because I see such an upside in NIO. But $3,266, we managed to grow 1,000 to 3,266 last year. My aim is very, very high for 2026. Will I manage to grow the $1,000 challenge to my ultimate goal of $100,000 during the year? It is close to impossible. I say so myself. I will do my very, very best. We have to keep high risk. NIO is high risk. I told you that all the way. I see NIO going up to 8 to 10. It hit almost 8 on the last run. And a stupid mistake not selling when we had the $1,000 challenge at $5,555. But we learn every day, don't we? Pushing to $100,000 will require almost magic. I will not buy with gearing. I will not go into options. I will only do stock by stock. A little more above 5,000, we can start to split into 2 stocks, etc. I gave you AEVA, which already up 37%, Chipotle up 30% as well. And we will get back to these sort of trades also in the $1,000 challenge. If you want to see how it goes, you have to subscribe so you get the next episode, and follow, because I will give you all, before I do anything, I will give you all the information. I will tell you exactly when I will trade, when I will buy, and when I will sell, so you always can follow. I hope you had the best Christmas ever. I hope that you start this year on a fresh note. I hope that you will rethink your portfolio, dive into good literature, or at least some YouTube videos. Try to learn more skills, enabling you to make 2026 the best trading year so far. Until next week, just have a super week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information, you agree and are held liable for your own investment decisions.